Shares of DocuSign rising after beating expectations in its fourth quarter. The company is saying its AI offerings are boosting customer traction. For more on these results and the industry at large, we've got Alan Tigeson, who is the CEO of DocuSign. Plus, joining for the conversation, we've got our very own executive editor, Brian Sazi. Alan, good to have you back on the program with us. Thanks so much. We were listening in, and we've heard some of the comments that were made during the earnings call as well. Just take us into this quarter, but specifically the outlook as well for the rest of this year.
Yes. Well, first of all, I think we had a very strong Q4. We really outperformed on both the top and bottom line metrics relative to guidance and consensus. And that's continuation of the theme for the entire year, really. It was a transformative year for us. We managed to stabilize our core business, which I think is much healthier now. And we've become much more efficient. So operating income is up 10 percentage points as a share of revenue over the last 2 years. And then, as you noted, we've launched our new AI-enabled platform managed contracts, and we call it IAM, and it's off to a very strong start with great customer acceptance, and we're really encouraged by that. And so that allowed us to express some optimism and a re-acceleration of billings in our guidance for fiscal 26.
Alan, always nice to see you. Brian here. Help us square what you saw in billings, because that is one of the main call-outs I see amongst the folks on the street that I have talked to, getting high marks for those billings. But the past few weeks, we're talking about potential recession in the first half of this year. What are you seeing in your business?
Yeah, so far, we're not seeing any significant macro effects on the business. Now, just as a reminder, DocuSign is incredibly well diversified across sectors, across company sizes, and pretty diversified across geos as well. And so we don't tend to see gyrations in individual sectors as much. With that said, as I looked at our February numbers, for example, our transaction volumes were pretty much on target with what we had expected, not seeing any major impact there. So at this point, we haven't seen any impact of the recent volatility.
Alan, I'm asking all CEOs this, and I want to put this to you. We're getting a lot of policy volatility out of DC. I mean, as an executive that has to plan the business for the next 12 months, 24 months, 36 months, even dare I say next 5 years, how has it been like trying to do those things when headlines are changing every day from government shutdown to tariffs, you name it?
I just try to focus on what we can control. And I think most of our destiny is about the category we're in and how well we execute. And so I think we've made a lot of progress on that over the last couple of years. We feel we have a great value proposition, any part of the economic cycle, but perhaps particularly now where companies and governments are looking to become more efficient, provide better service to customers. We can help with both of those. And I think that's a very strong value proposition, and it's resonating with customers of all sizes.
I know that on the earnings call, you talked about the priority of retaining profitability gains while also making necessary investments to accelerate growth. And it seems like capital expenditures are one of the pain points, or at least sticking points for conversation that analysts are having around names like yours in this environment, trying to figure out how much needs to be spent in order to be made and for that longer run rate period of time. What is the capex profile as you and the executive team are thinking about it now compared to the accretiveness of those investments long term?
Yeah, we don't do a lot of capex, but we're a beneficiary of the capex of others. So we're certainly a heavy user, and we're in the midst of a significant migration to public cloud. And so we noted how that was going to impact our operating margins modestly during that transition, until we completed. But I think mostly we're a beneficiary. We are thrilled with the investments that our partners like Microsoft, Google, and others are making. We benefit from them. That's what enables us to offer our AI services. And so I think in many ways, we feel like we're riding the wave of the AI investments that are being made while being able to benefit specifically for our category, where we're really the leading provider of agreement technology enabled by AI.
What has been the uptake on the intelligent agreement platform with international clients?
Yeah, so we launched to North America and Australian small and mid-sized businesses in June of last year. And then towards the end of the year, around December 1st, launched with localized product for international markets. It's now basically globally available, and began our rollout to enterprises as well. So there's only a few months of data, but I'd say so far the international markets are responding much like the North American market did. There's tremendous interest in medium and small companies, and I think we have very strong product market fit there. And so I'm very confident that we can repeat our experience in North America in international markets. The enterprise market in all regions will take a little longer, just because there's a different and larger set of expectations, and we have to mature some as a company to really be able to fully serve that. But that's the booster rocket, if you will, for DocuSign in the years to come, is to complement our strength in small and mid-sized businesses with enterprise. Of course, we're already in all those large companies. We're in over 95% of the Fortune 500 with our signature products. So we're already a trusted and approved vendor, and we have an opportunity to significantly upsell that.
You had mentioned on the earnings call as well, trying to get earlier renewals from your existing client base. So how are you seeing that in comparison with the deal cycles for net new clients? And ultimately, where do you see that kind of regaining some strength?
Yeah, we're really focused on delivering incremental value and of course being paid for that. We had an increase in early renewals last year, and to the extent that reflects the increased consumption or clients just for their own business purposes wanting to get going on that earlier, that we're of course want to accommodate that. But we also don't want to unnaturally try to renew contracts too early. So we've taken a few steps just to even that out a little bit, and so that will normalize here in 2026, and that's incorporated in our guide. So that gave us a little bit of a billing boost, and it's a little bit of drag on the billings numbers for 26. But that's the strength in 26 relative to 25 looks even better that way. So I think we're in a good place, and we have a lot of client interest, and we are just focused on expansion and driving more value for them, and then sharing it that.
Alan Tickerson and Brian Salzy, thanks so much for joining us for the conversation.
Well, thank you very much, gentlemen. Appreciate it.